Hey everyone, Sam here. Good to see everybody. Let's get started. Haven't had one of these YouTube sessions in a while, and given all the kind of news and all the things going on around the world, I thought today's topic would be appropriate: news and price. We'll get into that in just a few minutes. We are going to. It's really going to be two things we're going to go over during this session. One is obviously news and price, but before that, I thought it'd be appropriate to do a kind of a basic supply demand review. And when I do that, we're going to focus on the real supply and demand strategy. So you'll see kind of so how we do that, and then we'll dive in. And then it'll be better if we dive into news and price after that, because it'll make more sense from the chart supply demand perspective. Obviously, we don't have time in these YouTube sessions to go too deep into the details. So if you want more of those details, you can always attend one of these workshops. I don't do many of these workshops, but I am doing this one tomorrow. And anyway, just in case if you need more information. So again, today's topic, news and price. It's really a perfect relationship that, most people just don't understand or even get backwards. I'll explain that in just a few minutes. Anyway, welcome to the session. And if you have any questions, comments, just put them in the chat. Let's get started. Make sure you understand we are not investment advisors, and there certainly is no guarantee of success when it comes to trading. In fact, I think the last couple YouTube sessions I delivered were on that topic. Just focus on how many people lose money trading, why some of that, why that might be, and just being careful out there, right? In fact, available research suggests that the majority of active traders lose money. So remember, nobody's pushing you to trade your own account, and nobody's pushing you to risk your hard-earned money in the markets. Take your time, make sure you understand what you're doing. Certainly make sure you understand all the risk involved. And even then, take it slow, right? No rush. Better to take your time and try to get it right, because, again, the fact is a lot of people lose money at this. Okay. So, again, what I thought we would start with is just taking things back to basics for a moment. And we'll dive into just the basics of supply demand from perhaps a level of simplicity that you're not used to. So we find a lot of people overcomplicate things. There's a reason for that. And so, back when I developed the supply and demand strategy, that was way back in the late 90s. Starting on the trading floor of the Chicago Mercantile Exchange. I know I've told this story many times, so I'll be brief, but you'll get the point in a moment. So remember, I was facilitating order flow. All right, that was my job on the trade desk. I was right outside of the trading pits. Right, as I said, couldn't trade my own account because you can't trade your own account when you have access to the orders. Right, when you're facilitating orders for banks, institutions, money managers, funds, retail traders. You name it. But I really wanted to. So I'll show you what I did in a moment. But one thing that's I've seen over, that was like 20 something years ago, right? So one thing that's happened over the past 20 years has been this just so much content and development of the internet, right? You can Google or search how to make money trading, profitable trading strategies, and so on. And you get millions and millions of answers, right? And at the same time, there's a lot of people out there now talking about supply and demand trading. And they've added all these different rules and indicators and oscillators and trend and all this stuff. I can't tell you how many people come to me and say, Sam, this person does it that way and that person does it this way. And so, again, I thought we would focus today on the version of the supply demand strategy that I always cover, the real supply demand strategy. We'll go over that next. But I do understand, because some of you are confused because there's so many different rules and thoughts being thrown at you. So we'll dive into that now or next. But as I was handling orders, back then it was paper orders. Today it's the same thing. It's just all electronic and the volume is higher. But the orders very much look like this, right? Right. If you had 100 on the buy side, 20 on the sell side at a given price, okay. Once these 20 sells are matched up against the 100 buys, you're going to have around 80 on the buy side, 0 on the sell side. Competition to buy here is going to push price higher. It has to, right? That's how supply and demand works, right? If you have a number of buyers competing to buy at a certain price, but you have no more sellers, price is going to go up. So I started to bring price charts over to the trade desk. And after I organized the buy and sell orders, I would just put lines around the charts in those areas. And sure enough, this is what it would look like, right? And this is where the supply demand strategy comes from. Does that make sense? So the original rules and the rules that we've really always followed, we're going to go over that here. And let's dive into that next. So first, just a quick little review of how and why prices turn in any and all markets. Now, we're talking about the financial markets, but we could be talking about any market out there, right? We have, supply, demand, and fair value. And I find that not enough people focus on this whole fair value concept, the middle. What is fair value? Fair value is where the majority of buyers and sellers agree to buy and sell in a market, right? Again, trading markets, any market. If you go to the market for food, the grocery store, right? For houses, for cars, for appliances, for clothing, it's supply, demand, fair value. That's how we arrive at price. If you think about it, maybe you I don't know what your favorite food is at the store, but maybe it's ice cream. And maybe if it's okay, I'll talk in dollar terms, but maybe the container of ice cream normally costs around $4, right? Well, the store would love to sell it for $10, but the problem is not enough people would buy it. And the store wouldn't make any money, and we wouldn't get our ice cream, so it wouldn't work. There'd be no store. At the same time, as a consumer, we'd love to pay $1 for that $4 ice cream. But again, the store wouldn't make any money, so we wouldn't have the store. And at the end of the day, none of us would have the ice cream. So what happens is the majority of people, not everyone, the majority of people agree to buy and sell somewhere in the middle. Right? Yes, avocados would be my favorite example, but I'm sure more people would prefer ice cream over avocados. Yes, good one. Shuban, we'll talk about the Nifty in a bit if that's okay. Right? And yes, the Nifty gaps a ton because so many people focus on the news, but we'll talk about that in a bit. So fair value, because it's where the majority of people agree to buy and sell, has the natural tendency governing dynamic to pull price back to it. Right? Sometimes, like yesterday in the financial markets, you get some news or what have you comes out, a lot of buyers come into the market, pushes price up to levels where supply exceeds demand. Competition to sell at supply pushes price lower. Okay? Just like today in the financial markets. And you'll see these charts in just a few minutes. Sometimes there's bad news and really bad news, and which brings in a lot of sellers. All that supply moves price lower because it's looking for buy orders to fill those sell orders. Eventually, that drives price down to a level where demand exceeds supply. Competition to buy at demand pushes price higher, right? So there's always this governing dynamic at play when it comes to supply, demand, and fair value of push and pull. Does that make sense? So if we all understand that, then the next question is, what does this picture look like on a price chart? Well, let's start with fair value. Two characteristics that represent fair value. Number one, where's the majority of trading? Where's this recent and relevant area? I'll show you that in a minute. And characteristic number two, Notice this wide and whippy trading here, right? There's a reason why we have wide and whippy trading here. It's because there's a lack of a supply-demand imbalance here. In other words, we don't want to be a buyer or a seller in the middle. Okay, this is where most people buy and sell, but we don't want to be a buyer and a seller there. Okay. We want to look above fair value for our qualified supply zone, below fair value for our qualified demand zone. To do that, if we focus on the real supply and demand strategy, the original supply demand strategy, it's two pillars. We focus on two things: structure and location. Once we have for example, a supply demand zone that qualifies when it comes to structure, the next question is, where is it? Is it inside fair value or outside fair value? Remember, the main question is, where is price likely to turn? And then where is price likely to move to? But that first question, where is price likely to turn? The answer, right, is at price levels where you have a significant supply and demand imbalance. That's always where price is most likely to turn. That is why we stay out of fair value when it comes to entering positions, because that's what's missing in fair value. The reason why price moves up and down so easily is because you don't have a significant supply demand imbalance here. Does that make sense? But like like in that last YouTube video or the one before that, that's why a lot of people lose money, because they end up buying and selling right here in the middle. Structure and location. Now, we don't have time to go into the details of structure today. We'll do that in that workshop tomorrow, but let's keep going. So if we look at, let's look at 3 opportunities from this week in our live trading and analysis sessions. Okay. So this this is really kind of how we sort of started the week in the S&P. We had our qualified demand zone here, our qualified supply zone here. Notice what's in the middle. There's that wide and whippy trading, that trading range that we want to stay out of. Okay. As of yesterday's close, right, all that happened this week is price moved from our qualified demand zone up to supply yesterday. And then today it's much lower. We're down to the getting close to the next demand zone. I'll show you that soon. All right. And again, we're looking at the market for, this is the S&P, but this could be the market for ice cream. This could be the market for cars or clothes. It doesn't matter, right? We'd be having the same conversation. Wholesale prices, retail prices. All right. But the key here is stay out of the middle, but we need to identify the middle first. We don't start by looking for demand and supply. We start by looking for the middle. And then we look above that for supply, below that for demand, because that's where the imbalances are likely greatest. Also today, okay, yesterday and into today, we had the Nikkei, for example, rallying up into 2 qualified supply zones here. You could see today the Nikkei has dropped really hundreds of points. Big drop in the Nikkei from those supply zones. But here's the most important point. All right. Notice the location. Remember, location, it's key, of these supply zones, right, relative to this. Here's where the majority of trading activity is. Tons and tons of trading activity in here. Competition to sell its supply causes prices to turn lower and pushes them lower. Fair value, which is the true magnet for price, pulls price back to it. Why is it a magnet for price? Because that's where the majority of buyers and sellers agree to buy and sell. Make sense? Shubham, no reason to choose the SPY over the S&P futures or vice versa. Do it in both. Here's the S&P futures next. All right. Doesn't matter. Whatever market you want to trade, we could pull anything up here. Stocks, futures, Forex, crypto, a lot of crypto, right? Same thing. Bonds, real estate, anything. Right. Here, again today, or I should say yesterday, I believe, prices rallied all the way up in the S&P to, this is the S&P futures, to a qualified supply zone. And And what we were focused on here, there was a nice profit zone to the downside, but notice all the trading activity down here. This area is going to be a natural magnet for price. Okay, down in here. Now I don't know that we're down there yet, but the S&P had a really big drop from supply today so far. Okay, that's a pretty big drop. And anyway, so the main thing I wanted to kind of do, and again, these YouTube sessions are meant to be on the shorter side, right? And is do a quick review of supply, demand, fair value, right? Just as a reminder of how and why prices move in markets. Take a few minutes to go over what that looks like on a price chart, right? Kind of the short version of it. And now I think we can have a more informed conversation when it comes to news and price. So let's dive into that. So when it comes to news, it's always so interesting because people spend so much time thinking and focusing on the news, right? And I'm going to show you an opportunity or two here in a minute, but if you really think about it, as you say here, any and all influences on price are reflected in price. Think about it. We can add to this list here. This is not a complete list. I'm sure we could add a ton to this list. But all of us, everyone around the world has different thoughts and perceptions on all of these topics. An earnings report can come out like, there were a few this week so far, or some big economic report can come out. Everyone's going to have a thought or opinion. And often thoughts and opinions are different, right? That's what makes a market. But think about this. All of these thoughts and opinions, at the end of the day, whatever the topic is, whatever the news is, they're always going to lead to one of three things. Okay? Thoughts and perceptions from all of this stuff, whatever your thought or perception is always going to lead to one of three things: a buy, a sell, or nothing. Okay? We don't care about the nothing, but the buy or the sell, that's what will show up on the price chart. Does that make sense? Okay. All of these thoughts and perceptions leads to a buy or sell or nothing. We don't care about the nothing. It's the buy or sell we care about. Those are people that the news, the perception was so strong that they actually decided to risk money in the market based on that news. Make sense? Okay. So that's why, if you really think about it, any and all influences on price, or news, or whatever you want to call it, are reflected in price. Now, how does this all work? What creates that perception or that thought that leads someone to take action? Because there's plenty of news coming out. There's plenty of economic reports come out, and nothing happens in the market, right? Half the time on a Fed meeting, the market doesn't do anything. Well, think of it this way. Just like we talk about supply, demand, and fair value, can't we have the same conversation about news? Meaning, most of the time, or I shouldn't even say most of the time, when news comes out that is within expectations, right? Like in the US, for example, like any country, any big economic report that comes out, everyone knows ahead of time what is expected. If the number comes out close to expectations, well, nothing really happens, right? Just kind of stays in the middle. However, if the news comes out worse than expected, right, that's going to bring in a lot of sellers, okay, which is going to drive price. Think about a news meter here, right? If something comes out worse than expected, a lot of people, certain people are going to take that and feel strong enough about it and push the sell button. That's going to drive prices down, okay, to price levels where demand exceeds supply. Down here, the probability of price turning higher is big, and the profit zone to the upside is typically large, right? Now, if you think about, I don't know how many of you have been with me or us for years, but you think about how, remember we handled COVID and even going all the way back to 2009. I don't know if any of you were in the sessions back then, but March 2009, COVID, there was some big stuff in between. And anyway, the stronger the news to the downside, the quicker price comes down to price levels where demand exceeds supply that turn out to be incredible buying opportunities, right? Obviously, focusing on the risk, right? Okay. BP years ago, just like there's times where news comes out much better than expected. The market shoots up. That happened recently. And but it just brings prices quickly up to levels where supply exceeds demand. While the news is great, the opportunity to sell and put a position onto the downside, right? The probability of prices turning is high and the profit zones are bigger. Of course, with all this, you absolutely have to make sure you understand the risk and are okay with the risk. So let's take a look at an example. This was going back a little ways, but this is when one of the first, not the one of the first, but it was a bad CPI report. For those that don't know, CPI is Consumer Price Index. It's a measure of inflation in the United States. And of course, all these reports are very lagging, right? But anyway, so if you look at the S&P here, this is just looking at the day session. First of all, over here on the left, let's apply our structure location analysis to this. Notice what's right here. The majority of trading, right? Now, the words I haven't used yet, if we have time for a deeper lesson on structure location analysis for supply demand, you'll hear me talk about recent and relevant fair value. And that's right here. Think of the two characteristics we talked about. They're right here. Then we look below that for our qualified demand zone. Here we had one with a gap. Notice the distance between the two. This is what we're looking for. Right. Later that morning, a little bit later, still early in the morning, but the CPI report came out and it was a really bad number, worse than expected. That caused a lot of people to want to sell, and they did. Here's where the market closed the day before. So much supply came into the market based off this bad CPI number that there wasn't enough available demand at the prior day's close to fill all those sell orders coming into the market. In other words, the reason why prices gap down, here's where prices open that day once in the S&P, once the market opened and the CPI report was out. Now, why would they open right into a demand zone? Because that happens often, right? Why would prices open here? Because you have so much supply coming into the market, those orders need to be filled. Where are you going to find enough demand to meet all that supply, right? Right here at the demand zones. Giddy, yes. Whether you're a day trader, swing trader, long-term position trader, we just use different time frames, right? 3 different workspaces for that. All the same exact rules and logic and all that. We have a rule for everything, right? Not a lot of rules, but we have a rule for everything we do. That's key. So now think about it. Now, all that selling now the market's open. All that selling is happening. And so sell orders are being matched up with buy orders. Now, the last news-driven seller sells. And you're at a price level where demand exceeds supply. What's the next move in price? Higher, right? It has to be. Competition to buy, when you have no more sellers, prices, right? That competition to buy is going to move price higher. At the same time, fair value is pulling price back to it. Does that make sense? Now, what I want to kind of leave you with is, a day like this or any day, and this has nothing to do with day trading or swing trading or long-term position trading. It applies to everything. At all times, when we're trading, when we're developing our strategy, we're developing our trading plan, when we're investing, whatever, we have a choice of two things we can focus on. We can focus on what's real, or we can focus on what we feel. One of the biggest problems is most people make buy and sell decisions based on what they feel. If you focused on the news, which was bad, no one's denying it was a bad report. It was a bad report. Okay. If you focused on that to make a buy or sell decision, you were the seller. Okay. You focused on what you felt, right? Feeling was bad. However, if you focused on what's real, which is that even though the news is bad, prices are at wholesale levels, at price levels where the chart is suggesting demand exceeds supply. If you focus on what's real, you're likely to be the buyer there. Does that make sense? Okay. On that note, again, we always want to try to keep these YouTube sessions at 30 minutes or less. I think we did that. Wanted to, again, spend time on just a quick review of supply demand, but from the structure location analysis perspective, right? Okay. So, and then also start to talk about the whole concept of news and price. So hopefully that was helpful. Again, if you need more information or want to dive deeper into structure location analysis, you can always, if you're trading ready, I would suggest the advanced workshop. I'm doing this session tomorrow. I don't normally do all these sessions. So, but either way, hopefully that was helpful. And on that note, we'll see you next time.